Welcome. In this video, can CRO Coin be listed on Binance? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze CRO. When the price touches a rising trend line, the likelihood of it bouncing back up is considered a strong and positive signal in technical analysis. This is because an uptrend indicates that the overall market direction is upward and that buyers are more dominant than sellers. Each time the price touches this trend line, strong buying activity usually occurs, which shows that investors consider the price attractive at these levels. The rising trend line essentially signals that the market is progressing in a healthy way. Prices not only push their highs higher, gaining strength, but also lift their lows, showing us that support levels are consistently moving upward. Therefore, when the price approaches this trend line, it often signals a new buying opportunity. At moments when the price touches the rising trend line, the psychology of investors plays a particularly important role. Most investors anticipate support at these levels and enter trades, which increases buying pressure. Naturally, this causes the price to bounce upward. If there is no market-wide disruption or sudden negative news flow, such bounces can lead to stronger rallies. In this process, the trend line can almost be seen as a magnet pulling the price upward. After all, the uptrend is not just a technical line, but also a reflection of collective investor sentiment. The price bouncing from the trend line also shows that the market is going through a healthy consolidation process. No price chart moves in a straight line. There are always ups and downs. For an uptrend to remain healthy, the price must periodically pause and test certain support levels. Touches to the rising trend line serve as these resting points. These touches strengthen the upward move because investors regain confidence at the trend line and new entries flow into the market. As a result, the price gains momentum and resumes its upward movement. In such a scenario, one of the most important factors is that the trend line must not be broken. If the price bounces strongly from this line, it serves as a powerful confirmation that the uptrend will continue. The candlestick formations that form after the bounce also provide investors with clues. For example, long lower wicks indicate that there is a strong base of buyers at that level. This confirms the strength of the trend. In such cases, investors trading along the rising trend gain confidence and market psychology turns more positive. Positive psychology attracts new investors, further increasing buying pressure. The fact that buyers step in actively at the trend line is actually the result of the market's collective subconscious. These recurring behaviors often seen in technical analysis emerge because millions of investors react in similar ways at similar levels. Since a large portion of investors pay attention to trend lines, Fibonacci levels, or moving averages, these levels often act as self-fulfilling prophecies. In other words, because everyone expects a bounce at the trend line, buying activity intensifies there, and the price really does turn upward. As this cycle repeats, the trend gains even more strength. After a bounce, the price usually aims to form new highs. This not only confirms the continuation of the uptrend, but also shows that it is strengthening. Each time the price climbs to a higher level after touching the trend line, it reveals just how dominant the bulls are in the market. This also paints a reassuring picture for long-term investors, as the uptrend confirms that the overall direction remains upward despite short-term corrections. Over the long run, bounces from the rising trend line show that investors who remain patient can increase their gains. In such a strong bullish scenario, one more element that investors must pay attention to is trading volume. When the price bounces from the trend line with increasing volume, it confirms that buyers are truly stepping in with strength. Without volume support, bounces may remain weak, and while the price may show short-term rises, it could drift back down toward the line. However, when supported by strong volume, the bounce allows the price to gain sustainable upward momentum, which greatly strengthens the possibility of a rally. Bounces at the trend line also carry significant psychological impact. Investors often perceive these levels as the market's bottom. As a result, they buy more confidently. Collectively, the market accepts these points as dips, and buying pressure naturally increases. This becomes one of the most important triggers for upward movement. Additionally, when the price touches the trend line and bounces, sellers lose morale and selling pressure is broken. As investors notice sellers weakening, they make bolder purchases. If the rising trend line holds and the price continues to bounce from it, much stronger rallies can be expected in the medium to long term. Such bounces continuously feed the uptrend both technically and psychologically. Each time the price respects the trend line and rises, the bull's confidence grows and higher price targets come into play. As a result, the market takes on a strong and stable upward outlook. In conclusion, the price touching the rising trend line and bouncing back is a highly positive and strong scenario for investors. This serves as an important support point, both from a technical analysis perspective and from a market psychology perspective. Each bounce that renews strength confirms the solidity of the trend and the continuation of the upward move. These bounces are not just temporary reactions, but also the beginnings of long-term upward movements. Therefore, the idea that the price should bounce here is not just a technical view, but also one that aligns with the market's psychological dynamics. As long as this harmony continues, the price is highly likely to move towards new highs. But we can't base our analysis solely on trends. Let's take a look at the other metrics as well. Stay tuned.
The descending wedge formation is a chart pattern in technical analysis that investors and traders frequently focus on, as it provides important clues about the potential future movement of price. In general terms, this formation refers to prices moving within a downward channel while compressing, with each new low forming lower than the previous one, and each new high also forming lower than the one before it. In other words, prices shift lower both in highs and lows, but since this movement takes place between two converging lines, the structure of the formation resembles a narrowing triangle. That is why it is called a descending wedge. What makes this formation particularly noteworthy is that it usually appears during a downtrend and often signals a potential trend reversal. Even though the market remains under pressure for a while, the likelihood of a strong upward breakout is quite high. In particular, the breakout of the upper line is considered the most critical confirmation of the descending wedge formation, and this breakout often marks the beginning of a sharp rally. As for why the breakout of the upper line is so important, it all comes down to market psychology. Throughout the wedge, every upward attempt is met with sellers, and the downtrend continues. Investors operate under the constant perception that prices will keep falling. However, as the wedge narrows, the power of sellers weakens, while buyers gradually start stepping in. When the price tests the upper trend line, it reflects the exhaustion of selling pressure and the growing influence of buyers. For this reason, when the price breaks above the upper line with strong volume, buyers who have long been under pressure finally enter the market freely, and this influx often leads to a powerful rally. The rapid rise following the breakout clearly demonstrates why this formation is regarded as a reliable reversal signal for investors. To better understand the bullish potential of the descending wedge formation, it is useful to look at its formation process. Although new lows continue to form during the pattern, the downward movement of these lows slows down over time. In other words, each new dip extends less downward than the previous one. This is a sign that sellers are losing strength. Likewise, although the highs also continue to move lower, the narrowing structure reflects a kind of compression. This compression shows that the market is heading toward a breakout point. Investors know that the longer the market stays compressed, the stronger the breakout tends to be afterward. This is why the descending wedge is not just a chart pattern, but also a strong signal showing how the balance of power in the market is shifting. Another key question is how far the price might rise once it breaks the upper line. Analysts typically measure the height of the wedge at its widest point to set a target. This height is then projected upward from the breakout point as the potential target. For this reason, the price target after a breakout is often equal to the wedge's height. However, depending on overall market conditions, the strength of the trend, and the trading volume during the breakout, this target can extend much higher. Particularly in markets with a strong bullish bias, the descending wedge formation not only marks a reversal point, but can also become the beginning of a major rally. Another important point is that the formation can often trap investors before the breakout. Because prices form lower lows within the wedge, it creates the illusion that the downtrend will continue. However, the fact that the price is moving within a narrowing structure actually indicates that sellers are weakening. This is why experienced investors remain patient when they spot this formation, avoiding rushing into short positions and instead waiting for the breakout. When the breakout occurs, they enter strongly and benefit from the rally. This shows that the descending wedge is valuable not only from a technical perspective, but also in terms of investor psychology. The descending wedge formation also often signals the end of panic in the market. As prices fall, investors lose hope and expect prices to go even lower. However, as the wedge narrows and the price approaches the upper line, this panic gradually fades.
The possibility of Cronos, CRO, being listed on Binance appears to be a very strong likelihood when considering the dynamics of the crypto market and the policies of exchanges. First of all, CRO currently ranks 18th in market capitalization, which shows that it already has significant market value and a large user base. Being in the top 20 of the crypto ecosystem signals both reliability and potential for investors and exchanges alike. It is almost impossible for global giants like Binance not to have such a project on their radar. This is because one of Binance's core strategies is to list strong, community-backed, high-volume projects to provide diversity to its investors. The fact that CRO is already listed on major exchanges such as Coinbase, OKX, KuCoin, and Huobi shows that it is already past a critical stage for a Binance listing. Binance typically checks whether a coin has strong liquidity, community support, and acceptance on global exchanges before listing it. CRO more than meets all of these conditions. Coinbase, known for its strict regulatory compliance and thorough evaluation of projects before listing, already supports CRO, proving that this project also has a reliable legal foundation. Similarly, being traded on OKX, one of the largest exchanges in terms of trading volume, shows that excluding this project would not be a logical move for Binance in the long run. It should also be noted that Binance's coin listing decisions are not limited to technical or regulatory criteria. Binance also looks at community strength, user demand, and the contribution of a coin to its ecosystem. CRO has significant advantages in this respect. As the native token of Crypto.com, CRO benefits from the enormous visibility in recent years. With sponsorship deals, ad campaigns, NFT marketplaces, DeFi integrations, and user-friendly applications, Crypto.com has reached millions of users. It is almost impossible in the long run for a coin belonging to such a strong ecosystem not to be listed on Binance. It is also well known that coins listed on Binance usually see their market cap and trading volume increase even further. CRO already has a high trading volume, but a Binance listing could multiply it significantly. Since Binance is the exchange with the most users in the crypto world, any token listed there gains access to millions of new investors. Binance investors in particular tend to show high interest in newly listed coins, which could drive CRO's price movement upward. Looking at Binance's listing policies, it becomes clear that projects with high market capitalization, listings on global exchanges, and strong ecosystems are prioritized. CRO fully meets all of these criteria. Another important point is that Binance has listed many projects similar to CRO in the past. For example, tokens of decentralized finance platforms, coins that offer staking opportunities, and projects with strong communities have all found a place on Binance. Listing the token of a globally recognized brand like Crypto.com would not only meet user demand, but also increase Binance's trading volume. Although Crypto.com and Binance are competitors in the sector, this rivalry does not prevent CRO from being listed on Binance. On the contrary, giving Binance users access to CRO would be a strategic advantage, since Binance risks losing users to other exchanges if it fails to meet their demands. Binance would not want to take that risk. A Binance listing for CRO could also mark a turning point for the crypto industry. Such a development would further increase investor confidence in CRO and attract the attention of institutional investors. Being listed on Binance represents the pinnacle of global visibility for a coin. This would give CRO significant momentum, not only in terms of price, but also in ecosystem growth. Many coins have seen major increases in price and trading volume following a Binance listing, and a similar scenario is highly likely for CRO. In light of all this information, CRO's potential Binance listing can be seen as an almost inevitable process. a coin already in the top 20, accepted on global exchanges with a strong ecosystem and millions of users, is only a matter of time before being listed on Binance. Considering Binance's listing policies and past examples, CRO being traded on Binance in the short or medium term is a highly likely scenario. In conclusion, CRO's listing on Binance would be a highly positive development, both for the CRO community and the broader crypto market. Such a listing would further strengthen the Crypto.com ecosystem, increase investor interest, and potentially drive CRO to new all-time highs. Its current presence on major exchanges like Coinbase and OKX already indicates that the path towards Binance is open. The next steps are simply a matter of timing and Binance's strategic decisions. Based on the current outlook, CRO's listing on Binance stands out as a very strong and positive likelihood.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.